Welcome to the Morning Download podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover Cramer's pullback prediction, Elon Musk's concerns with Tesla, private equity investments, stock market retractions, regulatory actions in the crypto market, and the importance of studying companies before investing in stocks.
Jim Cramer, the well-known CNBC host, has been sharing his thoughts on the stock market. He believes it may be time for stocks to take a step back. According to Cramer, some stocks have been experiencing huge gains way too quickly, almost like shooting straight up with no real reason behind it. He doesn't see a full-on market crash, but he does expect certain major stocks, especially in the tech and healthcare sectors, to experience a fall. In other news, Spirit Airlines saw a significant drop in its shares after a judge blocked their planned merger with JetBlue. Apple is also potentially facing a hit to its sales after the Supreme Court decided not to review Epic's App Store case. Over in China, Premier Li announced that the economy grew by around 2% in 2023. Lastly, we have some concerns from investors regarding the upcoming political situation in the United States. With Trump and Biden preparing to face off, there's apprehension about how stocks could be impacted in 2024. On top of that, Americans are starting to pull back on their spending, but they remain quite concerned about their debts. So it seems like Elon Musk is stirring things up again, and this time it's all about his ambitions for Tesla and AI. Musk recently expressed his concerns, stating that he wants greater control of Tesla in order to lead the company in the AI and robotics field. He specifically mentioned he wants around 25% voting control so that he can be influential but not untouchable. Musk even hinted that if he doesn't get what he wants, he might start building products outside of Tesla. This desire for control raises questions about why big asset custodians like Fidelity and BlackRock, who own significant stakes in Tesla, don't seem to actively participate. Musk wants to know why they never show up for work. If we simplify things, it's clear that Musk wants more power, and if he doesn't have it within Tesla, he's willing to take his ambitions elsewhere. This could make it harder for Tesla to achieve its goals. It's worth noting that Musk currently owns around 13% of Tesla stock, as he sold billions of dollars worth of shares to purchase Twitter. Investors and analysts aren't too thrilled about Musk's move. They argue that it's not the right time for him to ask for additional compensation, considering the company's stiff competition, profitability issues, and ongoing legal challenges. Tesla is still dealing with a Delaware Chancery Court ruling related to a shareholder lawsuit over Musk's 2018 $55 billion performance award. Until this issue is resolved, the company is unable to offer any new compensation plans. On another note, it's interesting to see how companies like FedEx are venturing into their own all-in-one e-commerce platforms. Meanwhile, Boeing is facing its fair share of challenges, and their stock performance has taken a hit this year. It's down about 21% year-to-date, and some downgrades are expected. So, let's talk about what's been going on in the exciting world of crypto lately. It seems like India has made a move by blocking access to major offshore crypto exchanges. That's definitely something to keep an eye on, as it could have an impact on the crypto market. Meanwhile, the price of XRP has taken a sudden downturn, which is interesting because it almost invalidates the uptrend that we've been seeing since last week. It's always fascinating how quickly things can change in the crypto world. Speaking of changes, the Grayscale Bitcoin ETF has seen a whopping $579 million in daily net outflows. This just goes to show that investors are constantly reevaluating their positions and making moves accordingly. On a different note, Argentina's president, Javier Milei, has given the green light for provinces to create their own local currencies. It'll be interesting to see how this plays out and if it has any implications for the broader crypto landscape. In other news, an analyst has suggested that Shiba Inu could be primed for a rally following the news about a spot Bitcoin ETF. It's always exciting when we see potential opportunities for growth in the market. And finally, the US ETF market is heating up with Ethereum. This is definitely something you should keep an eye on if you're interested in the crypto space. Oh, and one more thing to note is that Coinbase is facing some challenges with the SEC, which could potentially put 1/3 of its revenue at stake. It'll be interesting to see how this battle unfolds and what it means for the popular crypto exchange. Let's dive into the world of private equity. Now, private equity is a whole different ballgame compared to private debt. We're talking about people with big bucks here. You usually need millions to get into the game, but let me tell you, the returns can be absolutely mind-blowing. Of course, it's not all sunshine and rainbows, because the risk factor is definitely there. Basically, private equity is when you invest capital into private companies with the expectation that they'll grow massively in the future. It's like placing your bets on the genius of someone else. It's a risky move, my friend, but if you hit the jackpot, the rewards can be exponential. Now, keep in mind that this is not something for everyone. It's a game for the big players who can afford to take on the risks. But if you have the means and the appetite for it, private equity can be a thrilling and potentially very lucrative venture. So, before you jump into this world, make sure you do your homework, understand the risks involved, and be prepared to roll the dice on someone else's genius. It's an exciting game, but only for those who can handle the intensity. So, there's this great quote that I came across today, and it really got me thinking. It's by Peter Lynch, and he says, "If you don't study any companies, you have the same success buying stocks as you do in a poker game if you bet without looking at your cards." I mean, think about it. Imagine you're sitting at a poker table and you have no idea what cards you're holding. How likely are you to win? Not very, right? Well, the same goes for investing in stocks. If you don't take the time to study and understand the companies you're investing in, your chances of success are pretty slim. Now, I'm no expert in the stock market, but Lynch's quote really resonated with me. It's a reminder that when it comes to investing, knowledge is key. You can't just blindly throw your money into the stock market and hope for the best. You need to do your homework, research the companies you're interested in, and make informed decisions. So, the next time you're thinking about investing in stocks, remember Peter Lynch's words of wisdom. Take the time to study the companies, understand their fundamentals, and make smart, informed choices. Your chances of success will be much higher.
In today's podcast, we discussed a busy day for investors with news across various sectors, including Cramer's pullback prediction, Elon's concerns with Tesla, private equity overviews, stock retraction expectations, rate cut uncertainty, India's block on offshore crypto exchanges, and the importance of studying companies before investing for better success. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.